Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Friday, May 3rd, 2023. Before I click through the charts, I just want to encourage you to please click like, share, subscribe, all the content on YouTube if you would, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Tesla report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and the Apple stock analysis. Also, 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week out to the 3 to 5 month near-term investor. We're always looking for 20% moves at least on all those individual stock picks, and you can see all of that for no cost. 5-day free trial up front. So check out wickedstocks.com. Daily Tesla report for Friday, May 3rd. Let's take a look at the charts. I'm going to jump to the daily chart. I think that kind of articulates what I've been trying to say in the opening sequence here. I know you can't see it here, but this is the daily chart. And it was about a week and a half, 2 weeks ago that we closed below a long-term support area that I'm not showing because it's not graphed anymore. But it was a long-term channel bottom. And we were expecting bearish continuation through May and into June trade. And then we had a Wednesday earnings, as I recall. We gapped right back above all that. And in the process of this gap, expecting this descending channel top today at 174.54. And it was Monday of this week where there was announced that, they've got the Chinese contract for auto driving. And that gapped us above this channel. So we were expecting kind of a 1 week rally to 174.54. This formation was a little higher. In fact, on the weekly chart, you can find it at 177.04. We have that range here. And that having gapped above that 174.54 formation, we then shifted into anticipating 227.26 as a 3 to 5 week target. I was saying 2 to 3 months when volatility is a little more restrained, but given what's played out over the last week, I think 3 to 5 weeks is still in the realm of probability. Holding above 174.54 will keep 205.69 in reach over the next 1 to 2 weeks, 227.26 over the next 3 to 5 weeks. Working our way up today, we do have nothing more than Thursday's high, 184.60. Now, the low of the high, I believe, is 184.54, so it's in the same vicinity. And it can contain intraday buying pressures, and below which the 174.54 formation remains in close reach. We did test this area, I'm going to say essentially, on Thursday. I don't think we tested it to the very tick, but we did test its sister formation, if you will, on the weekly chart at 177.04. And we came off of that area very modestly on by the end of the day. But I will say 184.60, our upward pivot point. If we push through 184.60, 194.05, I think, is a realistic day target. 194.05 can contain daily buying pressures, and if settled above, should Monday to Wednesday of next week result in a test of this 1 to 2 week target at 205.69. At 205.69, if you're a 1 to 2 week swing trader, as I've been saying, maybe you bought that 177.04 down to 174.54 region yesterday, Thursday. Now you're holding for a 1 to 2 week rally to 205.69, where profits can be taken, and perhaps you could play the short side for a week or two. But once again, you 3 to 5 week swing traders may have also bought the mid to upper 170s on Thursday, and you're now holding out for 227.26. And I do think if over the next, say, a few days, we can close above 194.05, that shows promise, but really it's closing above 205.69. That is our next 1 to 2 week buy signal to the targeted 227.26. 227.26 remains our 3 to 5 week objective above 174.54. Now for the downside, if we happen to break 174.54 today, 168.84 is in reach today. I believe this is the gap high, 168.84. And if we close today below 174.54, this market is back on the defensive. I would expect within 3 to 5 days or less, 160.51. And over the next couple, 2-3 weeks, the 130s. 138.80 is a long-term trend line we tested a few weeks ago on the weekly chart. It's actually actually 138.35, I believe. I don't know. Yeah, 138.80 was the low. 138.35 was it one or the other? It's 138.35 was the low, but this trend line was lower then. That trend line is now a 138.80. And so that would be our anticipated target if we were to close today back below 174.54. I take all that back. 138.80 was the low. And I don't know what 138.35 is. I think it's the actual trend line. There are other things going on in the low to mid 130s. The 130s has a lot of decent support area. So if we close below 174.54 and you're a 1 to 2, 2 to 3 week swing trader, my suggestion is to exit first and foremost a long position. And secondly, consider playing the short side. If you're a 3 to 5 day swing trader, you're looking for the upper 150s, low 160s. And if you're a 2 to 3 week swing trader, you're looking for the upper 130s, possibly the lower 130s before I see the market getting oversold if that were to occur. But, that is just a scenario. What really is at play right now is the fact that we are in the midst of a meaningful buy signal as of Monday of this week. We have retraced back to support. The market now free to rally to 205.69, possibly by the end of next week, 227.26 over the next 3 to 5 weeks, where profits can be taken on a purchase of the 174.54 channel top, and perhaps you could play the short side. We'll be outlining what those objectives might be to the downside if we approach the 227.26 channel top. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of our 5-day free trial. I'll be back Sunday afternoon with Monday's Tesla report, and you have a great weekend.